Hello and welcome to this Tuesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we're going to have the lovely Donny Gilbert giving us a broker update. But first we're going to go to the legendary Dean Croke with a carrier update brought to you by PowerFleet. Stay tuned.
Hello and welcome to today's carrier update brought to you by PowerFleet. Today we want to talk about Valentine's Day, which happens this Friday. It's one of the biggest events on the retail calendar. There's lots of freight moving around the country, but there's some unique opportunity for specialist carriers deep in Florida. If we pull back a little bit and have a look at some of the markets, this is the refrigerated outbound tender volume index at the state level. What you see here is that there are some markets that are elevated today here in California. In fact, San Francisco is one of the biggest hives of activity for Valentine's Day, chocolates, flowers and gift cards, in particular dining out. Other markets include San Diego, Las Vegas, Dallas, Chicago, Atlanta and New York City. It's estimated, according to the National Retail Federation, that about $28 billion will be spent this week on Valentine's Day, which includes about $6 billion in jewellery, about $3 billion in candy and about $2.5 billion in flowers. In fact, in the United States alone this week, we'll push out about 200 million red roses for our loved ones. So love is in the air this week, and for some carriers there's some significant opportunities deep here in Florida, and that's where we want to focus our energies today. That's where we think there'll be some significant opportunities for the right carriers. So let's have a little bit of a look at how flowers flow. Generally, globally, flowers flow from the south to the north. And most fresh cut flowers are grown in the equatorial countries. Here we've got Colombia, Ecuador, Ethiopia, Kenya. They have 365 days of year of sunlight, so they're a great market for fresh cut flowers. Generally you'll see Amsterdam, the Ellesmere Dutch auction is serviced by the African continent. Over here a lot of our fresh cut flowers come from Ecuador and Colombia into the port of Miami. In fact, a lot of trucks are rolling out of Miami this morning with fresh cut flowers that were harvested yesterday afternoon and delivered by air freighter overnight about 4 a.m. this morning. So heat's the biggest enemy of flowers in particular. So what's happening is there's a very tight supply chain window. The cold chain kicks into high gear, and what we see this morning is that there's a lot of activity coming out of this part of the world. If we take a look at some of our US customs import data, what we see is that the two countries in particular deliver most of our flowers. The Port of Miami receives about 85% of flower imports into the United States alone. The hub of Miami is a massive air freighter hub for fresh cut flowers. And if we look at our US customs import data from last year, we see that Ecuador volumes rose about 70% in this week last year, just before Valentine's Day, and volumes out of Colombia increased about 40%. We talked to some of the major air freighter countries like LATAM, based out of Chile. They will triple their air freighter flights into Miami this week alone. So what we see is that there's around about 40 to 50 air freighters are arriving overnight. They hit the market about 4 a.m. They're cleared through customs, they're sorted, packed, and then loaded onto trucks, and they're outbound out of Miami, mostly in teams, by about 10 a.m. in the morning. So if we step back a little bit and have a look at the refrigerated outbound tender volume index, we can see over here that there's some significant activity for refrigerated carriers on the west coast. This is where there's a lot of population, obviously a lot of Valentine Day activity. But down here deep in Florida, there's some significant opportunities for carriers. Volumes will be increasing here. It's going to happen in the next 48 hours. So if you've got carriers, and this is where the savvy carriers need to be watching the market, if you're in Tifton, Jackson, Tallahassee, even down into Lakeland, you should be thinking about running your carriers or trucks in particular deep into Florida. There's going to be some opportunity in the morning. What's important is you get your trucks into the market well rested with their 10-hour break tonight so that they're ready to roll in the morning, because that's where the money's going to be. If we have a look at this time last year, what we see is that in the week before Valentine's Day, volumes increased about 25%. Refrigerated outbound tender volume index jumped about 25% in that particular week. We're expecting the same thing to happen this particular week, but it's going to happen in the next 48 hours. If we have a look on the supply side, carriers are generally in a bit of a malaise. There's lots of capacity in the market. Tender rejection rates are fairly low. If we have a look at refrigerated outbound tender reject index, it's down under 2%, which is really, really low, historical low levels. But Florida is a deep backhaul market. What we see here is that on the long haul, 800 mile plus, rejections are fairly flat also. Mid haul is a little bit higher, which is in interesting. There's sort of those regional hauls up to Jacksonville, Orlando. There'll be upwards pressure on spot rates there because refrigerated outbound tender rejects are up around 14% for regional hauls out of Miami today. But I think where the money's going to be in particular tomorrow morning is going to be on the Miami-Atlanta lane, where refrigerated outbound tender rejections are up around 17%, which is about 400 basis points higher than the national average. So if you're thinking about what you do with your carriers today, get them into deep Florida and look for some of those loads on load boards, in particular to the Atlanta market. If you're thinking about what you're going to be getting in terms of rates, if we look at our US truckload spot rates, what we see is that carriers on the Miami to Brooklyn run, they're going to be getting about $1.98 a mile. This is about 60 cents higher than the national average, so there's pretty good rates coming out of a traditional backhaul market. Carriers running to Chicago, the rates aren't so good to Chicago, but they're higher than the national average. Good chance of outbound loads there, $1.74 a mile. Philadelphia, about $1.87 a mile. A little bit higher up into Boston, and right down here in Atlanta, you'll be running about $1.87 a mile. So if your carrier is looking for capacity today, what you're going to be thinking about is how do I get my trucks a regional move? You need to be jumping on this quickly this morning. Get a regional move into deep Florida. Get your drivers rested, especially teams. Teams premiums. Team rates are going to be at a premium tomorrow morning for loads that can get to Chicago, Dallas, New York. All those can be serviced within about 20 hours. So shippers tomorrow morning at around 8 a.m. are going to be looking for teams that can be in Dallas, Chicago, New York in about 20 hours, and in particular West Coast loads in about 40 hours for Friday morning delivery. So the money is going to be in deep Florida tomorrow morning. That's where you need to be with trucks well rested, and that'll do for today's carrier update brought to you by PowerFleet.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Thank you, Dean, for that wonderful update. So apparently we have reefers in Miami, probably tomorrow morning to get these flowers shipped out. Brokers, what's always good for a carrier is always good for a broker as well. So you might want to look down in Miami as well and see if you can pick up some of these team loads and start moving them. Probably a very, very good rate on these lanes. So we're going to start out this morning. DHL Supply Chain Pricing Power Index, 25 is what we came up with last week, which means it's a very weak market for carriers right now. So in this case, when we're looking at brokerage, right now that would mean that you're going to have the pricing power over your carrier, so you should be able to help push your carrier rates down right now to help you create some margins on your loads. Outbound tender rejection rate, average 5.59%. This is very, very low, or pretty weak. It puts our spot rates right in there in the range of where our contracted rates are. You know, you have some people that bid your contracted rates fairly low, some that bid fairly high. So I always say between 4 and 7% means your tender rejection rates is kind of right in there in the range of your contracted rates. Our daily index for volumes, 95.88. That's moved up a little bit, but we're still holding about 400 points below where we want to be. Next, I want to jump into and look at our WRI, weighted rejection index. We see here up very top, Denver, Colorado, 6.9. This is the reason we built this WRI index, is because we want to see what is moving up. We like to see these numbers over 5, and we have one market that's jumped up over 5. Denver's at 6.9. I'll look at that here in just a little bit. But the rest of them, we see a lot of red in here, and these is because the markets are kind of falling down. Tender rejection rates are dropping. That's going to bring these numbers down. Our second highest is New Orleans at 3.47, so that's below 5, and they drop down quickly into 1.7, 1.1. So when you can't use the weighted rejection index, sometimes I'll take other measures and I'll build my own market table. Here, behind me here, I've built my own lovely market table, and I call them the quadruple R's. I've got reefer head haul index. I got the reefer outbound tender times, I've got reefer tender rejection index, and I've got reefer tender volumes, all listed here on one map that I've custom built. And I'm looking for the strongest reefer market. So I've sorted this by reefer tender rejection rates, and I want the highest tender rejection rate at the top. So here we have Memphis, 55.56% tender rejection rate. That means only 45% of the loads in Memphis are being accepted at contracted rates on the reefer market. Being at 55% tender rejection rate, we're seeing spot market rates are pushed well above our contracted rates. Moving on down, what I like to look for in this map is I like to look for a lot of green. Here we've got 3 green squares in Memphis. Moving on down, Fort Wayne, we've got 4 of them. So these are the markets that really stand out. I see that the reefer head haul index is moving up, tender rejection rates are moving up, and tender volumes are also moving up. Fort Wayne is at 33.18%. So I like to look through this map and sort through and find new markets that I can investigate, and then I bring them up on a chart. So let's jump into our charts. I've got to talk about Denver with the jumping up. We kind of talked about it yesterday, but here I have outbound tender volumes in blue. They've moved up to 121.18. The last few days, we really see our volumes jumping up. In the red line, these are our tender rejection rates. They have jumped up to 12.45%. For Denver, this is a very big surge. We have not seen these type of tender rejection rates in quite some time out of the Denver market. Now, a lot of weather has hit Denver in the past few days. They had up to 9 inches of snow in downtown Denver. In the mountains west of Denver, there was areas that got 36 to 48 inches. Avalanche came across I-70. It's really been some disruptions in this market here over the last few days. Jumping into Memphis again, we see that our tender rejection rates here in yellow have jumped up to 55%. And this is what we want to look at right here. We see an upward movement in tender rejection rates, meaning that rates are still in the upward direction. They're still getting higher. What you buy today at might be a little bit more expensive tomorrow. So keep this in mind when bidding your freight. But this is a good market that has a lot of volatility in it right now. Tender volumes are actually dropping down, but our reefer tender rejection rates are still moving up. The other market I want to look at today is Fort Wayne, Indiana. This is a smaller market. It only has 33.50 index points for its volume. But again, we see this large upward movement. Started here on the 5th, all the way to the 10th here. It's still moving in an upward direction. And tender rejection rates are up to 33.18%. So this is exactly what we want to see. So when you're bidding loads in this market, keep in mind that spot market rates are climbing. They'll continue to climb, and you need to increase your bids accordingly. And that will wrap it up for today's broker update. Thank you.
And that's going to do for this Tuesday edition of FreightWaves Now. The fun doesn't stop here. We're always posting around the clock on all your favorite social media platforms. Our content team doesn't take a break, so check us out there. Also, check out our FreightWaves TV app as well on all your favorite streaming platforms, including Apple TV. And for all my fellow Android users, we have you covered as well. We'll see you on the next episode.
Is the trade war back on?
Trade war.
Trade war, full-blown trade war.
15% tariffs on $112 billion worth of goods.
Hours earlier, China announced tariffs of 5% and 10% on U.S. products.